Hello and welcome everybody to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and 50,000 members, participants, and attendees going back to 2003. And 25,000 buyers, 257 vendors, training, market updates, and more. And we post market data, real estate investor market data, because you need to be a student of the market, and we'll tell you what's going on. We have strategies for up markets in each market. So let me give you a little market data right now. The average price house in Texas right now is $425,000, flat. Median price in Texas, $334,000, $335,000, down. Okay, but if you want to just look at one number that's kind of the barometer of the market, the most important number, it would be this number right here, months of inventory, months of inventory. What is months of inventory? If you took all the houses in the MLS, all the houses for sale anymore, okay, nobody else is allowed to put their house for sale. We're just going to sell the ones we have. And how long would it take before we ran out? And the answer is 5.6 months, which is also the average amount of time it takes to sell one house. Now that's the average. Some houses take much longer. That's why they call it the average. But the average is 5.6 months. We have 5.6 months of inventory. Let me put that into perspective for you. They say if there's less than 6 months of inventory, okay, you have a buyer's market. What kind of a market are we in right now? It's a seller's market. It's a seller's market. Now, a lot of people think, oh, the market's not as good. That's true, because it's a pretty good seller's market. 5.6 months of inventory, that's not much of a seller's market, but technically, by the definition of a seller's market, it's actually still a seller's market. So how come we haven't won? Prices went up 18% in 1 year. 2022, prices went up another 10.7% in 1 year. 2023, flat. 2024, end of 24, it went up a little bit. Why did it go up a little bit? Because at the end of 24, interest rates went down a little bit, but not much. So what's going on? Well, here's the thing about real estate. Real estate doesn't really care about anything other than two things, supply and demand. It's pure supply and demand. What's the biggest thing that's changed over the last several years? Interest rates. Interest rates go up or do they go down? What do you think? Down. What do you think? Okay. Got some ups and some downs. Yeah, I think you're right. You're all right. So, yeah, here's the thing about interest rates. When interest rates go up, yeah, loans are more expensive. Payments are higher, and houses are less affordable. Fewer people can afford them. And when fewer people can afford them, demand goes down. And when demand goes down, that pushes price. What's the offset? Normally, 2/3 of the houses for sale are resale, and one third of houses for sale are new construction. Right now, it's inverted. What happened to all the house? Because they got a 3% mortgage and they don't want to give it up. They should be. People have jobs, the economy is not bad. People should be saying, honey, let's get a bigger, nicer house, but they're not. A mortgage, I don't want to give it up. Let's stay where we are. So all of that supply is being held off the market. So when there's less demand, but then there's also less supply, what happens when there's less supply? Pushes prices up. So we got things pushing down, we got things pushing up. In fact, speaking of not, but we are in the middle of a housing shortage. Who's heard of this? Than we need for the number of people who need a place to live. And we don't have enough supply. What does that do to prices? Pushes prices up. We have another problem or issue or opportunity, depending on how you look at it, in Texas. Think about this. Last year, California Last year, Texas gained 500,000 people. Where do you think they know where they went? But there's a bunch of them here too. And they all need a place to live. Okay? So there's all kinds of influx migration, right, that's pushing demand up, okay, which pushes prices up. So we have things pushing down, we have things pushing up. When you put all that in a blender, we have a flat market. We have a flat market. Inventory's been growing, but the market's still technically not much of a seller's market, but technically it's still a seller's market. So I'll give you a quick forecast, and then we'll wrap things up. Here's our forecast. In this School of Real Estate, A&M, and a bunch of online sources, we're not here to bias you when we tell you it's going sideways. We have ways to make money in all those situations. But here's the forecast. If you were looking for some exciting market bottom, that was probably it, and there wasn't much to it. We expect, because the Fed tells us this, that interest rates will go down a little bit, probably another half point by the end of the year. And that will juice, it'll help the market, but not much. So we expect the 1% because we get a little juice from the interest rate, but there's just not much happening. So it's going to stay where it is. And it's a great time to invest. You know, sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. But in this kind of a market, all the strategies work. It's not hard to buy. It's not hard to sell. And it's a great time for real estate.